Hi everyone, today let's talk about Amazon stock. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So Amazon stock has been on a run and it has multiple growth levers working in its favor, so let's talk about it. The stock has rocketed 4,700, almost 4,800% since May of 2004. It's a massive company at almost $2 trillion, and they generate $575 billion in net sales in 2023. So definitely a big company, definitely one worth owning at least a little bit of it, and most of us do, at least in the S&P 500. And they mention here as a catalyst, currently online sales is only 16% of all retail spending, which is crazy to me. I buy almost everything on Amazon, it feels like at this point, and 40% of that 16% is all spent on Amazon. My guess is that this 16% is going to go higher over time, and that Amazon is going to benefit from that. You also have AWS, which is a massive grower, and really what's dictating the multiple of Amazon right now. Current run rate, $100 billion per year, and an operating margin of 31%. So big margins, definitely what you want to see, and you can see that growth rate, 17%. It's a strong company for sure. It's got lots of vehicles, and that is one of them. And of course, AWS is going to be a major factor in the AI fight. AWS demand is continuing to increase due to its infrastructure, so that's definitely a value add there. And on average, Amazon is supposed to grow by 11.2% between 2023 and 2026. On a consensus basis. And they also mention on a price to sales ratio, it is in line with its 10-year average, so it's not expensive relative to where it's been. And this company should continue to benefit from overall economic trends, talking about data being the new oil here, and data is unlimited, and Amazon is a big dealer in that data. And AWS is really what's going to drive this to growth, but the retail side does have some growth potential as well. Moving over to the charts, looking at Amazon here on the monthly, you can see it's been a very consistent uptrend up until about May of 2020. Did have a move higher there, and then it round tripped that move here to January of 23, and then it went higher until current price, which you could argue is kind of within this trend. Got the upper trend line here, did overthrow it in that initial high, did come back down to that lower level, but it's been within that range here since October of 2001. Obviously, you have the dot-com move, went super high up to about $5, came all the way back down to 30 cents. So round trip that entire move. But zooming in here, you can see that sideways choppy action. So we actually got here in September of 2018, round trip that move here to January of 23, like I talked about. And now we've round tripped that move right back to the highs here. So August of 21, right in that zone, dipped low, rallied right back to that zone. It's also worth mentioning, you can see momentum fading here on the monthly chart. RSI not overbought yet, but you can see wick rejections, still slightly positive on the month, but last month it was bearish. You can see that first step down last month. Currently, if it were to close, that would be another bearish step. And typically once that starts to roll here, eventually you do see a bigger move down on the monthly chart. But it is worth noting, it can take a couple of months to actually roll to the downside. You can see sideways choppy action for many, many months while this momentum continued to fade, and then we eventually rolled to bearish. And even once we were in bearish conditions, it really didn't break down here until January of 22. And then once that happened, it was a pretty significant down move. So right now, it is in a bullish trend on the monthly chart, but that momentum indicator is something to consider. And then you can see that most recent round trip, all-time highs here at 188.61. Touched that in July of 21, touched it again in November of 21 before we rolled down. You can see clear double top at that level. Then we bottomed out right in this previous consolidation, so round tripping that entire move here. And since then, it's been basically straight up into current price. You can see we're right in that same zone, definitely touching 188.61, and currently you could argue we've already double topped, and we'll look at that a little closer. The concern here again, momentum, bearish, RSI, breakdown, retest, continuation. You can see that pretty clearly here. That retest and continuation lower is definitely not what you would want to see in a bullish condition. So the trend is still bullish, and we've seen it here as well. A double top right in that 144 area, did break down, did get all the way to the trend line here, didn't quite touch the 55 EMA, but it overthrew the 21. So even if we were to get a move like that, you would expect a 167 area to get tested. And if that were to break down, then your next level would be that 55 EMA around 149.36, which would be a pretty substantial move from here. About 17% lower if it were to make a move. I wouldn't expect it to happen anywhere near 1 week, but we have seen some pretty bearish weeks here. 8% there, 6% here. So it could do it in like 2 to 3 weeks if it was super aggressive. I don't think that that's going to happen, but right now, definitely concerning. Big wicks at all-time highs, double topping already. And you can see what I mean here on the daily chart. Big move to that level as you would suspect, it is a magnetic level, broke down, you have a midpoint here, big wick down, caught a bounce, overthrew that level, closed above it, and then rejected. And now this looks quite bearish, and you can even see pre-market here on Tuesday, it is moving lower, momentum bearish, RSI bearish. You would expect this to get to at least oversold conditions. And you can actually see on this RSI, the RSI is a little bit higher right now. It hasn't overthrown this low here, but I suspect that this is going to get to a lower RSI read, and then we'll see what happens from there. And then looking at the volume profile, you can see some volume here at 180. Next level would be right in that 173, 174 area. That's where I think it's going. It's already broken my level, so based on my rules, I would expect this to push to the next support. And that would put it below all of these short-term EMAs and SMAs as well. So another bearish tick mark for me. Pretty much everything does look a little bit bearish, except for those longer term trends, which are still bullish. Moving over to the Tasty charts here on the monthly, you can see that upper ATR band, 184.66. We've touched that on the last two candles, rejected from there, so that seems to be your overhead resistance. It is worth noting monthly chart is in bullish conditions based on the ATR stop, but that support on the monthly chart is all the way down at 124, 123.50 or so. Momentum on the volume weighted MACD is still technically bullish. It is building every candle, so we'll see how this plays and how this month closes. My guess is that it'll close pretty much right here and stay bullish, but then the next candle for June I would expect to be bearish, even on the volume weighted MACD. And once those start to roll together, that's a bit of a bearish indicator there. Looking at the weekly chart, no big surprises. It is in bullish conditions. You can see we hit that upper ATR here on the 8 April week. Only got to that second ATR band on that second high on 6 May. And then two bearish weeks in a row. You would expect that to continue at least to the midpoint, 173.50. So pretty much the same price target as we talked about on the previous chart. Momentum, bearish, big volume on this candle here, which is a little bit interesting. That's a pretty bullish candle, big bounce, closed pretty much near the high on that big volume. And then we did get a slight follow through. So that is a bullish indicator. I would put that in the bullish category. You can even see that next candle did step towards bullish, but we really haven't seen that follow through. And price action is always king. We're closing below that 8 EMA, which is a little bit concerning as well. So I would expect at least a short-term down move to that 21 EMA. Then we'll see if it bounces from there like it did on this previous dip. And then looking at that daily chart, you can actually see bearish conditions here. So that dip low did take out those bullish ATRs. And then we tested that bearish ATR here right at that previous high, did not close above it. So that would give you a bearish lean right here. And then it did follow through to the downside. And you can actually see that first candle step here towards bearish on the volume weighted MACD. You have that 55 EMA on the daily chart here at 180 flat. If that zone breaks, then your next support would be at 174.87. So pretty much in that same zone. You can also see that volatility is starting to contract as both of these pull in a little bit. So maybe we see a little bit more sideways choppy action. Doesn't necessarily have to trend in any direction. But overall, to me, I do think this is bearish. And I do think that 89 EMA is a potential zone where we could find support, even if it ends up bouncing and chopping sideways from there. And then moving over to the 4-hour chart just for a moment, I do want to highlight, you can see this is a pretty consistent downtrend. It's not really hitting that lower ATR band, which is down at 178.06. But you can see big move down, return to the middle, big move down, return to the middle, big move down. You can see the ATRs are also pretty consistently trending lower. So that is not a great indicator. Even if you wanted to trade this bullishly in the short term, I would be patient here. You can see on the shortest time frames, it is below all of the EMAs and SMAs, which is not what you would want to see if you're looking to trade this to the bull side. So overall, for me, I think this is a bearish lean. Looking at the options here, get about $1, $1.20 to the upside, 182s. Over the next couple days, the stock is trading around 180.50, so that gives you a little bit of standoff, plus a decent potential for profit if you wanted to be a little more aggressive here at $2.30 at 180. It's a little bit in the money, but I would expect it to move out of the money. So looking to sell calls, decent opportunity there. Your fill may vary, so it depends on what you get, but you can see it's only about a $3,000 buying power to sell that naked call. Pretty low on the deltas, $119 profit. I would expect that to close out of the money, as I think Amazon is going to move a little bit lower. If you wanted to be a little bit more conservative here and sell that a little bit further out, you could actually go to the 185s and still get a little bit bigger credit. For about the same buying power, you would have to be more patient on that credit, but the deltas are a little bit lower. You're a little bit further out of the money. And that still gives you an opportunity on that same trade. And then the more aggressive look here, $350 over the next week and a half, 20 deltas. And again, right in that $3,500 buying power seems like a decent opportunity in my opinion, if you believe the thesis that Amazon's probably going to push into that 175 to 172 area. Let me know down in the comments section what you think of Amazon. Are you trading it in the short term? Are you buying it for that 11% annualized growth? Doesn't seem like a question to me whether Amazon will be higher in 5 years, but in the next couple of weeks, it does seem like there's a bearish lean in my opinion. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.